Yeah,
Looks like somebody
All
just did.
right.
Thank you, Frank.
thank you, Frank.
I'm going to put my phone on silent. Uh, Jim, have you done that too?
Not yet.
Anyway, this is Wednesday. I believe it is what day is it? 23rd of July. And welcome to everybody, whether you're seeing it live or seeing this on replay. This is being Wednesday. It's the day that we mostly focus on training issues. And today we have a couple of things go with you that I think would be interesting for you. If you give me just a second, let me make sure I have everything up and running.
Called Hump Day.
Where's the elephant or the camel?
I don't know. It's just been called Hump Day for a long time.
Yeah. All right. Now Frank is watching for people joining to let them in. There's Casey. Jim, if you kind of keep your eye open for those blue boxes with if they come up, if you see any. But anyway, we'll just go ahead and get started and see everybody catch up. Once again, Casey and Brenda, for your edification, Frank is having some audio and visual issues today. He's there, he's listening in, probably going to be cringing at what we say and talk about him. But anyway, we'll have fun doing that. But he is there, and hopefully, as the surf comes in, he'll be able to be able to speak up after a little bit. We'll see how that goes. Welcome to Bruce. Haven't met you yet, but we're pleased to have you here.
Thank you. Good morning.
Good morning.
Morning.
All right, we're going to be talking about real estate today, among other things. And we're going to go over three particular properties. You know, James spends a lot of his time reviewing the real estate market and finding deals for us. We work them up. Sometimes we have a plan to actually start individually buying some of these properties. So it's of interest to us personally, but it also is good exercise. And by kind of letting you know what we're up to, hopefully you'll get the idea that you too can get involved in this. It certainly will benefit you to follow the process that we go through so that you can understand what your clients are going through when they get involved in a real estate deal. So I think it'll be beneficial from about three or four different perspectives. So let's take a look at this. Very first one is a four-unit apartment building that James found in a large city in Ohio. It's got about a 906,000 population, so it's a good-sized city. This property is a four-unit or fourplex. It's in pretty good shape, as you can see. It's a brick construction, first of all. It's You can tell by the gas meters down there. It's individually metered for four apartments. This is an aerial view that shows you it's got a pretty good sized front yard. The backyard is mostly parking lot, paved parking lot with plenty of parking spaces for a four-unit complex. The sale price is $280,000, which works out to about $70,000 a unit. Whenever we're looking at the multi-unit properties, if we can find one that's, maybe 70,000, 80,000 or less, it becomes more and more of a bargain. If it's a little more than that, gets up to 100, $110,000, it's less of a bargain. But James, how would you How would you rate this one in terms of sales price and the unit price per unit? Is that a good number?
Or to me,
Yeah, that would be you.
that one is a good number for that area. But every
The
area is
investment.
different because the values of property and the cost of living is different in all areas.
Well, I'll give you an example of that. Alma was sharing with us just recently the price of homes in Boston. We went to Zillow and started looking up a bunch of prices, and a very modest 3 bedroom bath and a half in many areas of Boston will run you about $600,000. Most of you live in parts of the country where maybe that would raise your eyebrows, and it probably should because in a lot of areas like Lexington, Kentucky, not far from where Jim lives, it'd be half of that. Uh,
Wow.
in many parts of the country, it might be 200, 250,000 at most. But, it really does and is highly dependent on the marketplace. FHA, for example, adjust their standards so that they can continue to offer mortgages in areas like that where the local market has far outstripped the rest of the country. So they change theirs. They understand the value of homes, and they work real hard to try to make sure that even in those elevated markets, that homeowners can actually buy a home. Here's what they say about it in terms of the investment highlights. This is from the material that we were able to pull off the internet. Major value add opportunity in a strong rental market. 12 rear surface parking spaces. I'm not sure I would have worded that quite like that, but it's a parking space with 12 space for 12 units or 12 cars. It's on a street that is a high traffic corridor, plus or minus $28,000 28,000 vehicles per day. The entire structure is 3,890 square feet. They call it a garden style apartment. I'm not quite sure I would agree with that, but anyway, it's an apartment complex situated on zero point 0.3 acres with 160 feet in front along this broad street. Currently in receivership. Bingo. That's the one that's all caps and it should really draw your attention. What does it mean when something's in receivership? Could be any number of reasons, but it's obviously in the hands of somebody who doesn't want to keep it. I mean, you can be guaranteed of that. Uh, in some cases, it might be the tax authorities have seized it. It may be police enforcement, law enforcement. They seized a home because maybe there was some illegal activity in terms of assets or what have you. It could also be just about anything else. It might even be just a bank foreclosure, but in any event, whoever owns it is holding it in receivership and they need to get rid of it. They need to unload it. That means this is a distressed sale. And that's really the kind of the best of all worlds. You take one of these seminars that people used to give all the time. You saw them all over the place. Still a few surviving that want to show you how to buy real estate with no money down and all that kind of stuff. They
Question.
nearly always are telling you, well, go follow the foreclosures in your community. Go to the post office or to the courthouse and find out what's being seized and whatever. The whole idea being to buy it below market value.
Alma's
So
got her hand up.
currently, I'm sorry, Jim.
Alma's got her hand up.
Yes,
Yeah,
ma'am. Alma, there you are.
Hi. So I was also thinking like if it is in receivership, it could also be going through a probate process. So
That's exactly
that's
right.
a red flag
That's
for us.
exactly right. Sure could.
Okay, that's what I wanted to point out. That's
Yeah, exactly. There,
I,
there,
I have a
there's
question too.
yes.
How do you
Yeah.
specifically know that it's that they want to get rid of it?
Currently in receivership. It may be it's a minor point in some cases because uh, it might be a situation where the family itself is trying to unload it. But currently in receivership nearly always means that it's in somebody else's hands. It's not
Okay.
the seller is not necessarily the person who has owned this and had it. It is now moved to a third party. And the way that property is moved to a third party is either through a sale or through something like this, a court action or a legal action that puts it in the hands of a third party.
Okay.
Uh, and that generally the obligation of the court, the obligation of a bankruptcy judge, the obligation of a probate judge,
Hmm.
or a legal entity of any kind is to liquidate the property. I mean, that is their legal obligation to do so. How they go about it is all a matter of how the law is written. But if it's in receivership, you can be guaranteed that the receiver, the person who is temporarily holding title to that property, has a fiduciary responsibility to unload it, to
True.
get rid of it.
I just never heard the term receivership before.
It's not commonly heard. Usually they'll be a little more specific and say, well, it's in probate or it's in
Yeah.
this or in that. Receivership is of course, a legal term, and it's one that they can use. But it's odd that they use that particular word.
I'll
And
make a note of that.
yeah, yeah, it certainly, and is a.
I think
It,
it's used in bankruptcy.
that's right. Yeah, it usually is bankruptcy or in probate or some in the hands of a legal entity. It may even be maybe a bank. Usually they'd refer to it as simply REO asset, meaning that they have real
Hmm.
estate on the books that they need to get rid of. So, everybody's got their favorite terms. In this case, we don't know precisely why, but it certainly is an invitation to look closer.
Yes.
That was helpful. Thank you.
Uh-huh. The
When I saw it down there, I already went and looked it up. So
yeah,
learning.
yeah, that's right. All right, now here's the property facts that, again off of the flyer, the information that we got off the internet. $280,000 is the price. Price per unit 70,000. Says it's an investment, sale condition, distress sale. That's another confirmation that that it's considered a distress sale type of situation, which usually means you can get it certainly at, but hopefully below the market. There are 4 units. It's a multifamily. It's apartment, garden, Class C, and so forth. All that kind of stuff. Over here, you can see that essentially it's got two one-bedroom apartments with one bath each, and it's got two two-bedroom apartments with one bath each. Here's the square footage. It's got 24-hour access to public transportation. And looking at the maps for the neighborhood and so forth, it certainly indicates that it's in an area where apartment complexes are found and there's good public transportation access directly to that neighborhood. So all of this has been confirmed. We know this to be the fact.
And
Now,
you said, I'm sorry, you said that the building class is the indicator that there are lots of apartments around.
actually, it was the aerial map that I was able to look at to show me the neighborhood. Zillow is a real terrific tool for us to use.
Okay.
And by frequently going to Zillow to look up any address that you want to see in the United States, you can see a lot, including usually they'll have an aerial image of the entire neighborhood or even the entire city, and they will have home values on each particular property. And you can see for yourself how it's laid out in the community, what the comparables are, the traffic flow, major streets, arteries, that sort of thing. So it's a very useful tool to frequently look up and find out what you want to find out.
And this is a current listing that we're looking at?
It is not. Let me think. It was when you saw it. Jim, can you expound on that?
Yes, it's still a current listing, and any of these that he's referring you can buy them if you want them, or if you've got a client that'd like to have it. So they are
Hmm.
for sale and ready to go.
Oh, wow. Okay. Thank you.
Could you repeat where it's located? I missed that. I came on a couple minutes late.
Uh,
Ohio.
this is in Ohio, large city, 906,000 population. And you can see a brick structure. It's a fourplex, has four apartments in it. Sale price is 280,000. Price per unit 70,000. And again,
And
that's
what city? What city?
it's in a city in Ohio. We're not at liberty to tell you precisely where, but it's a city in Ohio. The population of the city is about 906,000 people.
Okay.
Uh, it's got 12 units in the background there. You can see them right here. Are 12 parking spaces in an apartment in a parking lot for that building. Uh, got a large front yard, separately metered. And this is what we have seen from the website that we got this information from. Two one-bedroom
Frank can't
apartments.
talk. He's putting things in the chat. He says, "Who will fund it? Will ezFinancial help us buy this property?"
He's baiting the hook here. Okay. We certainly can get this funded. And yes, it's a property that would be happy to if you have an interest in it, or if you have a client who has an interest in picking up this kind of property, we can certainly get into the details, and we have lenders who would fund this absolutely. Now, I'm not going to get too deep into some of our analysis, but I'll kind of show you the highlights. In order to evaluate a property, this is some of what we go through. List price of $280,000. Purchase price, we'll just say for the sake of purchase of argument that it's 280 as well. That's not necessarily the case. If it's listed for 280, it's a distressed sale. We might be able to come down on the actual bid on the purchase price. The down payment you'll see is kind of a derivative of something else that comes up in a minute, so just bear with me on that. Down payment at that number would be about 51,000. Appraised value, I'm guessing that the appraised value is going to come in well over the list price, but that's to be determined. The amount to finance after the payment of the down payment would be 28,760. Now the purchase cost, we have appraisal that's nearly always paid by the buyer, a broker fee. Typically, in a case like this, we could well imagine that we would probably not have to pay the broker fee ourselves. The seller would probably pay that. Taxes and insurance. There's going to be some prorated, at closing. There'll probably be some minor expenses as well. Total purchase cost of about 17.4 to buy. Our cost, the buyer's cost, would only be without the real estate broker commission about $9,000. So the total out of pocket up front would be about $60,000. Might conceivably have a first with a lender, a second maybe by the seller. And a distressed sale, it's not uncommon at all that the seller will take back a second to make sure the property moves. In this case, we've structured it as a 60-40. Rates for the second would be probably a little higher, but here's the kicker. The second mortgage frequently on this thing, you might be able to do interest only for a term. For example, like a 5-year term or something. It might be amortized for 120 months. In other words, 10 years. But you might be able to get a deal where you could actually just pay the interest only payments for a period of time. In any event, the primary mortgage would typically be set up for a 360 month term, which is 3 year or 30 years. There'll be lender fees, of course. There'll be miscellaneous fees. Here's the principal that you'd actually be financing on these two mortgages for a total of 237 910. Monthly payments on the debt service would total between the two mortgages $2,200. Annual payments $2,700. Now the loan to value, when you work it out, I essentially set this at 85%, which dictated what our down payment needed to be in order to get this number. Many lenders will sometimes set a limit, sometimes they won't. So you just be completely pessimistic and conservative. We put in 85. This is essentially a guesstimate. We don't know yet, but a guess of what the rents would be. Two of the small ones, the one bedroom units, maybe $900 a month, would be a monthly gross rental of $4,600 for those two, and two of the two bedroom apartments at maybe $1,400 a month. So the total rent for all four units would be $4,600 a month. Your debt service is going to be $2,200. There's plenty of margin there for you to take care of your incidental management fees or anything else that you might expense. Jim, if you want to expound on the kind of expenses that would need to come out of those.
Frank, I did do that.
What's that?
Frank just throwed up a note that I should have used rent.com, and I did. Okay. So what was the question?
Can you go over some of the expenses that might be
Expense.
incurred over and above the debt service?
Well, they got to go in and redo the property, which is, because it's vacant right now. So they're going to have to do not a rehab, but, a redo. And, I kind of estimated the amount for that at about $5,000 a unit. And, getting it done, getting them ready to go and getting your property manager going and all of it. Then you'd be
Okay, we're
over,
talking about the expenses that you would have on a monthly basis over and above the rent,
over and above the rent.
over and above the debt service.
Well, you got your taxes and you got your insurance, you got the, um, all the other miscellaneous expenses that goes along with it.
Okay, that's what we're asking for. Can you itemize those for us?
Well, yes, I can, but I don't have a sheet in front of me right now. But anybody wants to call me, I got on that, I can do it, go over them for you.
Well, at this point in our analysis, that's what we would come up with is a detailed list of all of the expenses and after expenses to actually show what our net operating income would be after debt service and after all the expenses. My guess is if you've got gross rents of $4,600 a month and a debt service of $2,200 a month, you've got plenty of margin there to pay whatever incidental expenses you're going to have, and there'll be at least 1,000, maybe 1,400 or more left over. So, in other words, for this property, if you bought this property, you would be able to create uh, probably a minimum cash flow benefit from the net operating expenses of at least $12,000 a year. That's not including the tax benefits that you would get, which would give you all sorts of expenses to charge off on your revenue in the first place. So a thorough analysis of the numbers would generate a very profitable investment on this property. Anybody got any questions? I don't want to get too deep in the woods on this. We're trying to get to basically an idea that, on essentially $2,500 a month in debt service, you would have the balance of the $4,600 in rents to take care of your expenses and to have money left over. Let's look at another one. This is a 46 unit apartment complex in a small town in Mississippi. It's got 154,000 population. As you can see, there are two rows of apartment complexes here, apartment buildings.
Patrick,
Sorry, what? In any event, the unit price per unit for 46 units is $27,172. That's a lot better than 70. but we'll see. Let's take a look at this. Here's the blurb that is available on this property. Hassle-free investment opportunity in a gated community. Well, I'm not sure that I would say that's necessarily a gated community, but it looked interesting, didn't it? This turnkey 46-unit complex spans 9/10 of an acre with 21,715 square feet of strategic rental space across two manageable storage. With convenient on-site parking and controlled access points, this property offers the security tenants demand and the simplified management investors crave. Nearly 50% of this 50-bedroom inventory, featuring 1 and 2-bedroom layouts, underwent complete renovation last year, creating move-in ready spaces that immediately enhance your bottom line. This positive cash flowing asset requires minimal oversight while delivering maximum results or returns. The property's thorough layout and robust infrastructure eliminate common management headaches, allowing you to focus on optimizing your investment rather than day-to-day operations. Anybody wondering maybe if this is a little too pie in the sky? Somebody really kind of wordsmithed this and added a bunch of adjectives, and there may be too many adjectives in this description because you look a little closer and maybe it's not quite what you think.
From what
In
I see,
terms
I'd
of
be a little
the
timid with that.
yeah, yeah, the actual results that they're showing here, and this again is from the website. Cash flow after capital, $270,000 a year. Annual debt service is only $64,000. Cash flow before taxes, $2,006, $206,000. The cash on cash returns, 69%, which is outstanding. Debt coverage ratio is 4.2, which is outstanding. And the cap rate is 21.7%, which is outstanding. So,
Wow.
so far, it looks pretty good. But now let's take a little closer dive. As you can see, I guess this is the gated community. It doesn't look like much of a gate, but I guess you can call it a gate. Uh, the street and the parking lot is in pretty rough shape. I would imagine you're going to need to resurface that fairly soon. Uh, and despite the fact that the thing has apparently a turret, like a castle, built into the design, uh, you wonder why they're talking about security. Property offers the security tenants demand and the simplified management investors crave. Why is security a big issue there?
Because it looks like you need it.
Yeah,
Hey, Richard,
Yeah.
is this Section 8?
it might be. They don't mention it. It's not mentioned anywhere. But this is disturbing. Now, here's the killer for me. You look a little closer to this, and you look up the city on the internet and find out about the city. You're looking at this small town having a population of 154,000 people, which was a reduction of over 10% of the previous census.
Oh, wow.
Now, can you imagine any place in the United States that is experiencing that kind of population loss? It is, by the way, the top of the list for the reduction in population in that census. Of all the cities in the country, this one suffered the most decline.
Mm.
Look at this and you think it's security. Just because you got a little brick wall down there that makes it look like a gate doesn't mean it's protected. It looks like a kind of a dead end road, so it's at least not a drive through. But I would be
Looks
real concerned,
vandalized.
first of all, about the town. If they're experiencing that kind of decline, they've got some deep problems down at City Hall. There's some idiots in charge. You don't have that kind of population decline in the United States in any city. unless somebody down at City Hall is really making some mistakes. And this doesn't look very prosperous to me either. It just looks like it's, I guess you could go there, you can investigate it, you can find out what the real story is. It may have been major manufacturer left town or something, I don't know. But this kind of leaves me a little cold, despite the fact that they're claiming some tremendous results here. This is not bad to have a $200,000 cash flow before taxes. And it's at a fairly affordable price at only $1.2 million, which is reflected in the cash on cash return.
Any
So
idea what the occupancy is on that?
they said it, I don't think, as a matter of fact, I don't believe they said anything specific. This is about as close as they got. And the rest of the statistics are just not thin. You look at a town like this that is having all that population decline, you'd expect to see more cars. You see all these cars clustered down here. What you want to bet? These are empty apartments here.
I bet it is too.
Yeah. So in any event, not one that I would be enthusiastic about. I would certainly be excited about the numbers they're reporting,
Now,
but
well,
I'd like to know more about it. And the town is a big red flag to me until proved otherwise.
and there's also 12 units that still got to be repaired, rehabbed or what?
Out of 46.
Right.
Yeah, about a fourth of them. Anyway, we see these all the time. For every good deal that Jim comes up with, he goes through what, about 20 or 30?
Absolutely.
Yeah. But the whole process is you get into it, you analyze it, and you make a quick decision, you move on to the next one. But a town with that kind of population decline is a big issue that you'd want to pay close attention to.
Yeah, Frank
This
said,
is
look at that one.
What's that?
Said Frank just put his message up. We didn't like that one.
No. This is a 200 unit apartment complex in Mississippi. We looked at this a couple of months ago. Jim, why did you want to include this one?
Well, because it's cheap price, $10,000 a unit, it's almost like buying it for damn near nothing. But then again, you got to put $5,000 in each one of the units to run another $1 million worth of rehab on it. So
I have not liked this one from the beginning. It's a small town in Mississippi as well, and that town only has a population of 29,000 people.
Oh,
Most lenders, a lot of the lenders anyway, not most, but a lot of the lenders set a threshold that they want to see a city of at least, say, $35,000, 35,000 people. And it's fairly common that they will do that. They don't like small towns. It's just the market for resale and so forth is not that strong. There are a lot fewer people looking for properties, so it's going to be hard to unload this. But you take a look at this, and to me, it looks like a prison. Um, it was originally built perhaps as either a assisted living center or an apartment complex. And then it's been changed into other uses. All this stuff that you see on the front end here, they tried to turn it into like like a convention center or something like that. As you can see, uh, the whole area, it covers a lot of ground. $10,000 a unit is a terrific price if it's worth it. Says it's an investment, deferred sale, deferred maintenance is an understatement because this thing is in rough shape. 200
it
units, multifamily apartment, low rise. It's only 2 stories tall, actually 3 stories tall.
it doesn't
Uh,
have enough city revenue to cover a place like that.
no, it really doesn't. It's a white elephant.
Yep.
It just would not make any sense to get too excited about this.
Nope.
Even in their flyer, they say potential property use office building, telecommunication, hosting center, mixed use, medical offices. Nowhere does it say anything about an apartment. An apartment was how it was originally built. But in any event, that's that's one that we passed on before, and we'd recommend anybody taking a look at something like that. Small town, as Clarence said, it's just not a big enough deal to really gain the support of the community. It's kind of in the middle. It's in the Mississippi River Delta, uh, and not one that we would waste any time on. In looking at all these deals, I would remind you, and this is kind of getting back to what we've talked about before. The place to start with anybody looking for real estate or wanting to buy real estate or what have you, always, always, always get the credit report done first. Get the credit report and find out what you've got. Every deal, whether it's real estate related or otherwise, every deal requires a thorough review of the credit. And that is, as Frank's famously created here, a little acronym about credit, income, assets, and property, CIAP. Credit is the very first one, and frankly, it's the only one that matters until you've done it. Don't talk about any of this other stuff. Don't get too excited about anything. I mean, you sit there, you have the conversation with the client, you get all the information you can, you talk about it, you talk about anything they want to talk about. That's fine. But at the end of the day, the first thing you do is pull the credit, find out what you've got to work with. In most cases, we can help them cure their credit, make it better. So it's not something that closes the door, but you've got to know what you're dealing with. So credit is the very first thing. Frank has created this PowerPoint. I want to go through it briefly. You've seen it before, but we need to get them talking, find out what they want to do. At the end of the day, though, we've got to get the credit. And we're talking here about doing it through Bitly to get that soft pull 3 bureau credit report. Ron, you had a question. Ron, are you there? I think you're
Can
on
you hear
mute.
me?
Can, yeah. Try it
Okay.
now.
Yeah, I was on the phone with Brenda last night, and she has a story that I would love for her to share about taking that first step and pulling that credit report. Brenda, are you able to speak?
Yes.
Okay, can you share a little bit about the reaction you got from going through that process last night?
Yes, I was on the phone with Ron. We was talking, and he said, "Have you did your credit report yet?" And I said, "No, I haven't did it yet." So while we was talking, I went through the procedure of IDQI, and put my name in and everything. And then when I saw the results, I was like, "What? What? What?" So I really didn't know that all of the stuff that was on the credit report, I mean, it has everything on there. So that was my first time ever doing that, getting 3 credit reports for $1. And so Ron said, now you can tell somebody else about it. So
You
thank
know, that
you.
is so true. I mean, I've heard that so many times. And, I guess I don't know what the percentage would be, but in terms of looking at the population, there must be a huge percent of the public that has never looked at their credit bureau. And when they do, it's a revelation. It's like, wow. Sometimes it's on the good side, sometimes on the bad side. If it's on the bad side, they can easily get so discouraged because that is such a slam, to see bad information there, to see, bad results and realize, oh my God, everybody's looking at this but me, you know. But You just have to get past that because knowing is probably 80% of fixing it. It's at least 80, maybe 90% of getting it fixed and doing something about it. And the benefit of actually fixing it can be so profound so quickly that after it's like, you know, I could have had a V8, whatever slogan you want to use there, you just kind of get to the point where you're thinking, why in the world was I waiting? I should have done this. Somebody should have told me, before, the benefit of actually knowing my credit and doing something about it. But anyway, that's exactly the way most of us are, Brenda. You're absolutely right.
We pulled our credit as well using the resource you gave us.
Uh-huh.
And um, expectations for myself were a little lower than what came up. So it was surprising. I was thankful for that. And then
Yeah.
my husband's was good, as he was fine with his, for what he expected. He thought, oh, okay, I'm right where I thought I would be. So
Uh-huh.
I do like that. And I guess, yes, as Brenda has said, we can tell other people.
Yeah, absolutely right. And I'll tell you something, kind of, when you get a chance, go through that with kind of a fine tooth comb because there are still improvements, small things that you can do in terms of managing your credit from this point forward. Now that you know what's there and you realize, maybe it's not a good thing just to go ahead and have somebody do an inquiry on my credit bureau when I don't really need it, that sort of thing. I mean, there are decisions you can make going forward that'll kind of protect your status, protect your rating, and that's important to do as well. Good information. Thank you, Casey. Anybody else? All right. As we said before, it's only going to cost them $1. That's I don't know. They're doing away with a penny. Are they going to do away with $1 next year? I'm not sure, but whatever. It's cheap, uh, and we need to know if we have a client. I mean, that's the bottom line. Yes, there are people out there who will be asking for the sun, the moon, and the stars, and want to get everything, but they got a credit score in the 400s or something. And again, because they've never looked at it, they never paid any attention to it before. But we need to know if we've got something we can work with. Many companies want something greater than 620, but don't let that stop you. It is so easy to work on people's credit and to improve their lot in life. Why can't we do that? Ron, you had something.
Yeah, so Jim, so expectations, and that's very important, Casey. You brought up the word expectations. So this is where you have to be very confident, and this is why that pulling that credit report for that dollar is so important because it's not costing them anything really, but some time. Time is very important. So you have to set the expectations that no matter what comes back from that credit report, you have to focus on them making that commitment to say that they want to move forward in improving their circumstances because we can fix credit. The other thing is you have to be careful because some of these people don't have a credit score at all. So I don't know if you can address that, Richard.
You bopped out there just for a second. They don't have what?
They don't have a credit score at all.
Oh, yes, yeah. Well, and that's true. We had a affiliate talk to us just the other day. They have a lot of Hispanic clients in their business, and those Hispanic clients need access to cash. Well, guess what? Most of them don't have Social Security numbers. Uh, they have taxpayer identification numbers, ITINs, but they don't have Social Security numbers. Many of them, their banking relationships maybe only very casual in terms of sending money back home or sending somebody, by Zelle or something else. Uh, there are solutions there, and we can work with those people We just need to know what is the circumstance and how do we get this fixed. Uh, getting Sending them, for example, out to get a particular credit line with a particular company that we can set up for them to do that. I mean, we can start the process. We can, in some cases, kind of solve a lot of problems for them, but we just have to know what the circumstance is. Once we know, we can work with it. But they need to be able to share with us. They need to make that commitment. And Ron was absolutely right. That commitment is so important. Paying that $1, I mean, who cares about a dollar? Uh, but paying that dollar with their credit card tells us that they're at least willing to make a commitment. They're at least ready to put a dollar down on the table and say, "Hey, I'll pay this. I'll start the process." And that's the first step, but it's such a critical first step. But knowing gives us all sorts of things. Knowing opens the door. So here's the deal. You go to the reports, you pull a full credit report. We find most of the time that before we switch to before we put it in the CRM or start following the process or whatever, we gotta follow the CIAP. We need to get that credit resolved. Uh, we're suggesting, and this is probably one of the fine points that you need to kind of commit yourself to. You, not the client, needs to log into Bitly credit report and help them go through the process. Uh, Most people who get involved with anything are going to be suspicious. They're going to be wary. They're going to be tentative. To tell them, hey, go to this link and go ahead and pull your credit bureau, yada yada. Tell them all that you can. How many of them are really going to do that? It's like taking them by the hand and say, hey, let's do this together. If it's on a Zoom call with them or whatever, just take them by the hand and get them through the process. It's not that big a deal. It's not going to hurt. They can do it. And you doing that will get you a full credit report from all three bureaus, and it'll be in a form. And contact Brenda and Casey. I'm sure that when you saw those reports, you were probably impressed in the sense that they had lots of data there. They had a lot of good information. And the more of those you read, you'll understand it's a consistent format. It's always laid out the same way. It's going to make it so much easier to get through those documents, those reports, and know what you're seeing because you've seen that exact same format before. You've seen weird things, you've seen normal things, you've seen it all. And having that familiarity with the report is going to be so helpful to you.
Yeah, it was helpful. And I actually thought, wow, I have, my bank within the software of going online banking offers, oh, hey, you can take a look at your credit report, see how you're doing, all the little friendly resources that they have in the banking. And it doesn't have all the information that came out on this one from all three bureaus.
Oh,
So it was
that's right.
very helpful. Yeah.
I've seen some reports come back sometimes with 30 or 40 pages. I mean, granted there's a lot of white space there, but nonetheless, it is amazing the kind of information that's there, and it's all coming out of those computers. I mean, it's all there to see. Uh, but so many times I've seen other people's reports. Clients who say, "Oh, well, I've got that already. I'll send it to you." And they send it to us, and it's not nearly the same kind of thing. Ron, you had something?
Yes, Richard. Is it true to say that most underwriters will take all three of those scores, combine them, and divide it by three to come up with a score?
Some of them do that, perhaps. I think most of them, the standard practice in the industry is to look at all three, and they're always a little different, sometimes the same, but usually a little different. they'll take the one that's in the middle. You've got a high score among the three, you've got a low score among the three, and whichever number falls between those, that high and that low, is generally what they will take. So it's not necessarily an average, but it's right there in the middle of the range. And that's the one they'll usually use. Any other questions? Jim, would you catch us up on any questions or comments that Frank had? If you're following that in the chat.
He says, please contact, well, where the hell did the chat go now? Let's see. It says, please comment on the training today. Was it helpful? Can you use the material to work with?
Good question to everybody.
Yeah.
Was it
Oh,
helpful?
oh, absolutely. Training was definitely helpful. Very enlightening because when you pull up the picture, the price, and then you go over how you assess what's a deal that you pay attention to. We all need that. Can't get enough of it.
That's exactly right. It's the process. If a client comes to you and they are, let's call them an experienced real estate investor, they're probably doing that. If they survive one or two deals and still doing it, it's because they went through that. They may have a little software routine they go through or what have you, but they're going through that process. And if you're going to sit down and try to help them get the financing they need, at the very least, you need to know what they're looking at and how they go about their analysis. Uh, Usually, of all of the 100 or so deals that Jim reviews in the space of a month or two, uh, it's a pretty quick process. He doesn't get too deep into the weeds, but as he goes through that, he's looking for a few things that kind of stand out. And one of them certainly is that it's a good price per unit. If it's 10,000, that's way cheap. If it's 70,000, as you saw in that fourplex, that's kind of getting up there, but it's okay. If it's 150,000 or 200,000 per unit, I mean, good Lord, that's the same price that you'd pay for a freestanding home in a lot of markets. So, you just watch for that as a parameter to start with. Usually, in terms of these commercial listings, they're going to make some attempt at some point to disclose to you what the net operating income is. And that matters as well. Yes, Jim.
Well, see, one of the things we were trying to do was kind of show you what all has to be gone through to get into the multifamily properties. But the thing is, you don't have to do the most of the work. You just find your clients that want to buy and tell me where they're wanting to buy, and I'll try to find what they need. Because we want to get deals for you to going for you. And I'll do everything I can do for you.
Now, that's a heck of a service.
Yeah.
Go ahead, Ron.
Well, that's interesting. I didn't know that, Jim, but I just contacted a few wholesalers here in this area. Of course, they're going to be sending me listings and things like that. But and I know Frank, can you guys still hear me? I know Frank talks about
Yeah.
the paint, the kitchen, and those are perfect opportunities. I mean, that's what you want. But a lot of these properties, most of them that I've seen need roofs and they need HVAC repair. So that's not something that I would be interested in, but I would definitely take you up on that, Jim, because South Dallas, East Dallas, Texas, um, Fort Worth is really hot right now. Uh, Arlington is very hot over there by the AT&T Stadium, and a lot of people that really like purchase these properties here. The taxes is going up here in North Dallas, and they're selling these houses and moving into Oklahoma.
Well, just let me know what your people want, and I'll look for it, and I'll get it back to you. Now, I'm not going to your people because
No.
I don't cut no corners. I just want to work with you.
Right. Okay. Thank you, sir.
Well, one thing you've heard from Frank and me and Jim especially is that we see a huge wave of foreclosures coming. There's so many people who got into the 300, 400, 500, $600,000 homes when it looked like there was no end in sight. Well, the end is in sight. And a lot of markets are really beginning to shrink substantially. Uh, I think I mentioned before, there was the article about Las Vegas on the internet recently about the fact that they had over $7 billion worth of homes in that marketplace alone that were in danger of foreclosure. $7 billion in one city. It's that way all across the country. The real estate market, the home builders, and so forth, the banks are just absolutely working overtime to try to hide that fact from people. But the fact is, there are people all over this country that are in homes that the tax appraised value is shot up. They can't afford the taxes. They can't afford the insurance. They need to move, and they're looking around and they can't find something anywhere near their neighborhoods that's affordable. So the old habit of moving further and further out from the city center is continuing. And a lot of people are caught into that trap and trying to find a place that they can afford that's reasonable, understanding that home values generally are probably destined to collapse before too long. Yeah, Jim.
Bruce, what part of the country are you in? Hello?
He may not be able to hit
I'm
the
in Florida.
In
oh
Florida.
boy.
The prices down there is all right, ain't they?
It all depends where you live.
Yeah, I heard the statistics was that in the last year they've doubled in price.
Yes, indeed.
That's the same that's happening here in California, of course. And I don't know, we often talk about what what options are available to us, and also our children here in California, um, as far as the market, because it is crazy. It is really, really crazy. And what I've noticed is I'm not seeing a lot of homes for sale right now as we were before. And the other point is, at least in San Diego, there's a lot of um, issues with adding the ADUs. Like they're like really fighting now with the developers. Just little old me neighborhoods where developers are coming in, grabbing this empty land and putting in a regular, usually maybe there's two homes on one property or there's just a single family home neighborhood, and they're adding, you know, 8 units on a street with no parking, no garage, So it's a lot. It's but this is great. I just want to say thank you. I'm glad. I'm glad. Thank you, Ron, for connecting me. And thanks for you guys doing this. Frank and Richard and Jim, thank you.
Good. Appreciate that. Appreciate that very much. Well, that's wrapping it up. It is now 10 o'clock. We try to stick to our schedule when we can. But in any event, we appreciate it. We will be uploading this to YouTube later today, hopefully, so you'll be able to see it, and we'll go from there. Looking forward to it. If you have any questions or whatever you need to get in touch with us, feel free to call, but we'll be talking to you shortly. Take care. Bye-bye.
Bye bye.
Bye.
Bye bye, guys. Thank
Bye.
you.
Have a great day.
Same to you. Bye-bye.